James, good to see you.
Good to see you, Steve, and thanks for having us. I always genuinely do. I'm not just saying this. I do genuinely always look at the report and the Business Outlook report, because I think you guys come from quite unique. You've got quite a unique position in the industry in terms of what you see in terms of property that's being sold and invested in and moved around and so on. So yeah, it's always really fascinating. So delighted to play a part in it this year.
So we usually have a get-together to launch this publication, but of course it's very different this year, not least because of the lockdowns that have been put on us because of the COVID pandemic, which has had different implications for different parts of our business. The convenience sector and petrol filling stations, which we predominantly deal with, I think have been in a pretty good place actually throughout 2020. Particularly with convenience and petrol stations being regarded as an essential service. And I suppose I see things from a transactional perspective in the market. We see what's happening to trading, and we can provide some insight into the deals that are going on out there. But I suppose what I'm really interested in hearing from you, James, is probably how the ACS sees things as well, and how some of the bigger issues have affected the sector. And perhaps we can just probably kick off with initially talking about, I think probably one of the biggest issues that those retailers have, which was grappling with staff and shielding and isolating and stock shortages, which happened at the very beginning of the first lockdown last year. What was your take on what happened there?
Yeah, it's a really good question, Steve, actually, because thinking back to that time, that's what was worrying us the most. What was worrying us the most was that there were going to be staff shortages, not just in retail, but in food production, distribution, warehousing, and that would ultimately lead to some shortages and issues in terms of what customers were able to access. And then some of the stockpiling that we saw sort of mid-March 2020, when that really sort of hit a peak, and it probably came into our sector a few days later than the peak in the supermarkets. But that was driven by two things. It's driven by, to some extent, all hospitality closing. So, the 30% of food and drink that's consumed outside the home, that all moved across to be consumed in people's homes, bought from shops. So to some extent, it was just a natural increase there. But there was also clearly some consumer behaviour, people starting to get anxious about making sure they had essentials in, and so trying to buy things up. But there was no real rational reason for there to be a massive uplift at that time, and certainly some of the scenes we saw about people fighting in the aisles for toilet roll and things like that weren't sort of rational. But had there been mass absences at that time, then you would have seen more of that behaviour, because people would have been more legitimately concerned about the supply of those products coming through. And that never materialised, and I'm delighted it never materialised. And there was a lot of time in work on calls with governments and others talking about this, and I'm very pleased that all of that proved not to be needed in the end. But the main reason is just that the people working in all of those businesses really are. It's a sort of cliche thing, and everyone gets a bit sort of emotional about it, but they really are the heroes of this pandemic. Obviously, frontline healthcare workers as well. I'm not trying to in any way denude the work they've done, but people, all the messages at that time. You think back to March, April, and you've got to be feeling it now as well into 2021. All the messages are stay at home, don't go out, you can't go out, you mustn't go out. And yet those people turn up to work every day in roles that were putting them in contact with the general public in a distanced way, with lots of policies and procedures, perspex screens, other PPE, other ways of making it a safe experience. I think we did very, very well. But nonetheless, those people turned up to work. And I think that was really the, knowing what I know now, that would be the biggest thing that happened that allowed us to get through this sort of successfully, because as you say, we're deemed as essential businesses correctly, and we still are, and so we were able to carry on trading. But obviously that wouldn't have been worth very much if we couldn't staff the stores, and if our suppliers couldn't staff the wholesale depots and the manufacturing plants. So yeah, that's there were absences obviously at the time, but the fact that we get a lid on that was a huge relief, and ultimately allowed us to function as we did.
Yeah, I mean, one of the major themes I think we've put in the document this year is that the profile of particularly independent convenience retailers, but in fact all convenience retailers, is much heightened now. And you and I, James, know what a lot of these guys are like. We see them all the time. We meet them at the events and so on. But it was really heartwarming to sort of see the news stories coming out, illustrating how they were helping their communities, providing ad hoc delivery services to people that needed them, and taking supplies that they wouldn't normally take, and basically being at the heart of their community, which is really what we know that convenience stores are all about. And I think the fact that the sector has done, I don't mean this in the wrong way, really well out of COVID is nothing less than they deserve from that perspective. And I think one of the big things for me looking at the business aspects of what happened is that obviously turnover at all of these stores went through the roof, just because there was nowhere else to shop, and some of the products weren't available in some of the supermarkets that customers would have gone to. That shift of behaviour to local shopping is something that is a big opportunity for convenience retailers to take forward into next year. Do you see the same sort of thing?
Yeah, absolutely. And the point is that's sustained. So I definitely agree. In that period, I don't know, that was a week of the 16th of March, wasn't that? I think when things was going, felt very strange, and there's a lot of, unusual consumer behaviour in shops and so on. Now, immediately after that, towards the end of that week, when that stockpiling moved from major supermarkets and online, of course, so online delivery stocks getting all booked up. It was a few days after that, no more than that, but a few days after that, it really shifted into convenience. And I think that was, to some extent, about we were the only option. We were there. People found I can't get hold of what I need. They thought laterally about where can I get product from. But the point is, not just that we were there then, but that people stuck with us to a large extent. So that there's been a sustained increase in sales over that time. There's been particularly a sustained increase in basket size. So the footfall, different stores, different stories, but basically footfall has been relatively level. And obviously there's a bit of a constraint on footfall in terms of distancing and number of people getting in the store anyway. But the footfall has been relatively level, but the basket size has increased significantly. And what's in those baskets is the really interesting thing, because fundamentally what's in them is food. And I think our sector's always had quite an interesting relationship with food. But I think this has been and will continue to be a platform for more stores in our sector to become really credible food outlets where people do choose to feed their families from. Different retailers on a different path in that. There are some convenience stores people are not feeding their families from, and that's not their business strategy. It's about services, it's about impulse, snacking and so on, and they can play a really important role as well. You see the number of the queues outside post offices in the run up to Christmas, which kind of always happens, but much more so Christmas 2020.
Yeah.
And also with returns after Christmas 2020, that happening as well. And so you see more stores offering post offices, but also offering Pay Point, Collect Plus, whatever it is, the various parcel collection and return services. And so they've picked up as well. And so it's not just about food, but I think the story of our sector in 2020 was primarily about food and re-establishing ourselves as local food retailers, which is strategically really important for our sector.
It's where convenience stores came from, isn't it, I suppose, from that perspective. And I think that's one of the most important things, across the whole of the economy. There's a number of things, number of behaviours and activities that have been accelerated in many businesses. I mean, I just look at Christie and Co and the way we've adapted to remote working. We were IT savvy anyway, but we've become even more so. And obviously, that's reflected in what's happened in what you've described in some of the stores out there, accelerating the move towards food to go and proper shopping for the family as you've described it. And I think what will be interesting going forward is how that translates for me as a valuer into the trading performance of that unit, because it sounds like the turnover might be the same, but actually the margins might change considerably, and you might see a bit more profit coming out of those higher margin products, which tends to be food and fresh and that kind of thing. And also I think deliveries is a massive one, isn't it? Because we've all got experiences of collecting and taking parcels to and from your local convenience store, which you didn't realise was a depot for Collect Plus or Hermes or whatever else it might be. And actually, there's an impact there, I think, in the long run on how much storage space some people need to have behind the counter. And that comes down to property design and so on and so forth. How many shops have we been into where you can see the parcels stacked up against the window because there's nowhere else to put them?
Or on the shop
So,
floor. I returned some stuff and it's like, just stick it there on the shop floor. And it got there, I'm pleased to say, but still, this doesn't sort of inspire confidence.
No, that's right. I mean, so you know, and obviously that's not a sustainable position from a number of different reasons, and it could impact on how retailers start looking at the space that they're using. And of course, it's not all been a good story for everybody. You know, you said that there are some winners and some losers earlier on, and I think, you know, we've got to think about those stores and operations that are in city centres where there isn't anybody at the minute, or, you know, high footfall locations such as transport termini. You know, I think those guys are still going to struggle going forward. I mean, it's anyone's guess as to how many people are going to go back to work in those sorts of locations, and they may have to adapt in a different way. But if you were to sort of say, you know, as a percentage, how many stores are doing okay versus those that are not doing okay out of the 45 or 48,000 stores that are out there, what kind of percentage would you guess are doing okay versus not doing okay?
Yeah, so it's exactly the right question. We think between 75 and 80% of stores saw sales increase during the pandemic, and we got some data that backs that up. Actually, the data we gathered suggested slightly smaller proportion of stores doing better, but still a significant majority. But the more we talk to members and talk to groups about their estates, it's probably roughly 3/4 to a quarter split. And exactly as you say, the quarter who have not traded so well during this time, where are they? Well, it's transport hubs, it's major city centres, and to some extent petrol forecourts. Now, I think petrol forecourts with chimney pots around them, close to where people live, or even, you know, close to places that were still open, like hospitals and some other facilities, saw sales increase significantly. Now they probably saw a decline in fuel volumes. They bounced back quicker than I'd have thought they might have done. And I guess one of the reasons for that is that people were moving around less generally, but the thing that went, you know, is really still down at very low levels is public transport. You know, people are not wanting to get on. I love public transport. I haven't gone on a bus or a train for ages, you know, and I think people just avoiding public transport. So if people are going out, they're generally driving. So fuel volumes are below what they were. We're indexing down year on year, but not to the point that they were in sort of April last year, where the roads are completely empty. So fuel volumes are a challenge, but maybe not disastrous in most cases. But the shop offer, particularly, again, it's exactly the same for every other shop. If you've got a decent food offer, if you're close to where people live, you've seen that come up, and in most cases, you know, compensating for that for the loss in fuel. And I honestly think so. I think you've got the most interesting jobs in the market over the next few years, because all the things about all the usual logic about this is a high value store, is high, you know, is a high rental value, it's going to cost a lot to buy, and all the assumptions around property costs, I think, are going to change a little bit. You know, you think about where lots of the the big investments in our sector have gone. It's been in those city centre stores with great food to go, and it's, you know, that's been we've been trying to sort of ride that wave of people being out and about more, on the go lifestyles, consumption. You know, thinking about the, you know, catering towards the person who maybe works at your Blackfriars office and lives in a 1-bedroom flat in reasonably central London and spends most of their life at the gym or in the office or at the pub or whatever, and, you know, and filling in the bits and pieces around their life and being a convenience option for them, whether that's about food or services, whatever else it is. And obviously, those people are still doing those jobs, and they will come back to do those jobs to some extent, but I think in fewer numbers than they were before. And so it's just more the sort of secondary areas, those neighbourhood areas, and some convenience stores in those areas that were perhaps slightly underinvested and slightly underloved, because they weren't the sort of sexy thing about, oh, you can do loads of food to go and have all these wonderful concessions and all these big margin products, and that's what we're told the big investments are going into. Those sort of community stores, local stores, will now be doing things like lunch solutions, because there are more people in the area looking for lunch. And they'll be doing things like delivery, which you mentioned. You know, we reckon at the peak of the pandemic, about 600,000 home deliveries a week from convenience stores. Not from nothing, but from not far off nothing. There weren't many going on beforehand. And I think one of the issues for our sector is that part of our strategy going forward, and how do we deliver it? So are we going to do a delivery option as part of what we bring to the community? And do we do that ourselves? I mean, literally sometimes phoning up, not even taking a payment, sometimes taking cash at the door, or just putting it on account or something, like you might with newspapers or whatever, or taking payment over the phone, and then driving in that car to that shop, to that home, and dropping it off. Through to at the other end of it, you've got Uber Eats, Deliveroo, and those platforms where the customer is ordering through those platforms and your fulfillment for that. Through to things in between, like sort of Snappy Shopper and those sort of options, which sort of brings that together as a front end to the consumer and a system for the retailer to use in terms of executing that. And I don't know where we get. Different retailers will end up at different points on that spectrum, and I don't buy into the idea that delivery, is suddenly going to become delivery first and foremost, and the shop's going to become secondary. I don't believe that, but I think delivery will play an increased role in our sector into the future. So a lot of opportunities to build on what we already do.
And I would say that we've definitely seen an increase in activity from buyers who want to get into the sector. They've seen the opportunity. They see it as a robust sector. They may have been made redundant from another role. They may be looking at a change of career. But when we went through the lockdown period from probably April through to July, we had we had a buyer survey that we published on our website through that part of the year. Then there was a 65% increase in the number of people registering for retail on Christie & Co.'s website. And that was also pulled through to deal activity. So, we were quite fortunate in that we were able to shift some of the more challenging instructions that we had throughout the year. So stuff that might have been on the market for 6 months or whatever, and maybe the pricing was a little bit punchy. Maybe the store was compromised in some way. The turnover wasn't particularly healthy. I don't know. Those instructions suddenly started to sell because there was that much froth in the level of buyer demand. And so from that perspective, I think people have seen that opportunity, seen the trend that is likely to continue, which is more people working from home a bit more and more local shopping, and have jumped in and taken the entrepreneurial nettle and have gone with it. And I think that's going to continue this year. Just sort of moving. I know we're going to talk about what happens next year, hopefully, but moving into next year, there's a few disposal programs that I think are on the cards for some of the larger corporates who may want to take advantage of that activity in the market now and some decent pricing for the assets that are the tail end of their estates or whatever it may be, which is always an opportunity for a first-time buyer or somebody moving into a second or third unit. So there's plenty of option there for entrepreneurial retailers to pick up on all those activities you've talked about and push them ahead. And I think there's also plenty of empty space out there in the high street if somebody wanted to go down the route of developing something new. So I think next year we're gonna if dare I say it, have another good year, because there is plenty of demand for convenience.
Yeah, absolutely. And the challenge is, talking to all our members, the challenge, how can we hold on to some of those increased sales that come through? So there's a lot of generally we're quite a sort of steady sector to be in. We're dealing in everyday essentials. We're quite hedged. We've got a whole load of different categories that we sell. We're not specialists in any one thing. We don't sort of hitch our wagon to one particular category and one particular lifestyle or approach. So we've got that sort of steadiness in us. I think a couple of things I would say, one is how do we turn that into that opportunity, and I think we have to think quite broadly and quite creatively about that. We have to also recognise there are pressures on some of the things that we sell from a regulatory point of view, and that's everything from electric vehicles, so therefore traditional fuels, which is clearly a huge impact on the forecourt sector. Which of those alternatives do we offer? How do we offer them? What will customers actually want to do in terms of where they want to power their vehicles from? Changes there, regulatory and lifestyle, but also in terms of some of the food that we sell. So we're now looking into regulation to limit how you can display and promote products, a whole very broad range of high fat, salt, sugar products in store. So, essentially not being able to put them at checkout, aisle ends, store entrances, and as things stand at the moment, that would be for stores over 2,000 square feet. So, decent chunk of our sector, we reckon about 5,000 to 10,000 stores in our sector will have those restrictions. And the reason I'm saying is that will have an impact as well in terms of the property market. Will people think, well, actually, it's more attractive now to buy an 1,800 square foot shop than a 2,800 square foot shop because they've got different regulatory considerations.
I suppose one of the big issues on the table at the moment is Brexit and what that might involve for convenience stores. I suppose from my perspective as a valuer and agent, I don't have massive insight into that area other than reading what I see in the news. It's quite obvious that logistic issues are gonna have some kind of impact on the wider retail market. But do you have any views that might be representative of the industry as to how Brexit's going to affect convenience stores particularly?
Yeah, I think so. I would start from the point of view of saying the convenience stores will be impacted by the UK leaving the EU, sort of in a way that's more akin to how consumers are impacted than how big transnational businesses are affected. Because ultimately, we will respond if there are issues with supply of some products and some routes. Well, we'll respond to that, and we'll look for different products, or we'll find ways around that, and we'll work with our supply chains to do that. Now, the risk is if there is major disruption, because we are by and large smaller businesses, not solely, some very big businesses operate convenience stores, but because we're generally smaller businesses, there's always a fear that we sort of back at a queue, but it's harder for us to fight for our share of supply. So if there are supply issues, we have that we're faced with that challenge. But over time, we will adapt, and it'll be another challenge. But it'll be lots of very tactical challenges as they come up. And I think we have trust in and have to rely on our suppliers and our wholesalers to keep securing and supply and have contingency plans and alternative sources. I think there's all the sense there's this idea of this being this sort of bottleneck and this cliff edge. And I think that was never quite the case. And there will be a significant material impact, but it was never going to happen on 1st or 2nd of January in quite that way. But we'll have to see how Ireland and France in particular, as our closest neighbours, respond. And also particular issues to businesses trading in Northern Ireland.
Looking ahead to the rest of the year, I foresee a positive trading environment for us because of the issues we've talked about, the fact that there's high demand for convenience across the piece and petrol filling stations, and I think we're going to continue to see that demand outstrip supply of instructions, and that's our challenge, is persuading people when they're having a good time from a trading perspective to part with their businesses. But do you see any particular issues coming forward? We've talked about data a little bit and delivery and how tech could perhaps help retailers. Are there any particular issues at the forefront of your mind that will be at the forefront of retailers' minds going into 2021?
So I think the first one, to start with a negative, we are coming out into unprecedented economic turmoil, and we're going to be into a recession, and regardless of what the recession's all about, decline in GDP for 3 quarters, isn't it, or whatever. But it's not really about that. It's about households having significantly reduced income for a period of time. That's what we're actually talking. That's whether it's called a recession or not. That's what we're concerned about, and people having far less certainty about their household's income. Now, things like furlough scheme and other business support have mitigated that impact, but it's very, for many people, they're in it's one thing for me, and I don't know your exact circumstances, Steve, but those are some sort of white collar jobs where we can work from home and do our jobs from home, we still have a job. That's a situation you might have saved some money out of this because not traveling to work all the time and wearing out season tickets and those sorts of things. But that is not the reality for many people in the UK and many of the customers at convenience stores. So what that says to me is there's going to be a real challenge in terms of price. Price is going to become more important to shoppers. And that's a challenge for our sector. We don't usually win on price, so we have to be smart in thinking about how we work on price perception, how we work on value. What are you getting for the price in terms of convenience, locality, service, range, availability, that certainty that the customer has, that, yeah, I can walk 300 yards down to my convenience store, and if I'm confident the product will be in, I'm not going to feel ripped off. Now, whether it's as cheap as what's in the supermarket, which is a 3-mile drive away, is maybe it will be in some cases. But do I feel that, yes, I'm getting some value for that overall experience in terms of the availability, the service, the quality, and the proximity of that? And I think we have to continue to focus on that. We're coming up into a time where money is going to be tight for a lot of people. So that's going to be a real challenge for our sector. I think you're right about tech. I think we've found in this period of time, and I hope it's a lesson we really do take from it and don't forget, retailers who had great social media interaction with their communities, retailers who invested in tech were able to make things much more frictionless and streamlined, much less contact between people and kits and so on in store. Retailers who've invested in that, I think, in a significantly better position now. And we have to remember that and continue to invest. And whether that's things like delivery systems and apps and so on, perhaps that's part of it, could well be. But just generally thinking about how we invest in tech to make that make the processes in store much slicker. So I see opportunities, but also a bit of a threat there to our sector. We are not at the cutting edge on tech in our sector, and we need to be honest about that and try to address that. And also, we don't tend to compete on price as the first thing. And in tough economic times, that's challenging as well. So, yeah, some difficult things coming out into that. The good thing, I suppose, as things then start to open up, then those 25% of stores, I don't want to forget, you've had a challenging time in those locations which are driven by footfall to other things, whether that's other shopping, offices and people working, transport hubs, fuel sites. We obviously hope that they will then start to be able to recover and share in some of the benefits that the convenience sector see more widely.
I would anticipate that there'll be many more retailers looking to invest in their stores, perhaps having had a bit of extra cash, either from the government through Sybil's or because they've made a bit more profit through the buoyant trading period that they may have had. Have you seen any of that coming through at all in any of your surveys?
Yes, we're seeing a notable, not huge, but a notable uptick in the proportion of retailers saying they're going to invest. And particularly, I think, some independent retailers. And I think maybe there was a split before about prime locations with lots of investment going into them. And the investment was going into food to go and refrigeration and fresh and chilled. And that was it. And then the community stores that are maybe a little bit less loved by comparison, a bit less well invested by comparison. We haven't got the data to break this down, but reading from what I can, I think there's a bit of a move back towards those community stores getting the investment. People see the opportunity, which I believe has always been there, by the way, but I think has been really highlighted by what's happened in consumer behaviour during the pandemic. So yes, I think we will see investment, but maybe not in the stores that were previously getting the investment, in a different set of stores and maybe slightly different things. I still think refrigeration, which always comes out top in terms of the areas for investment, I still think that will be top, continue to be during 2021, but maybe more for, like everyday groceries and food, and that's really become a big focus for our sector.
One of the things you said earlier on about my job is going to be very interesting this year. I mean, it's going to be very challenging, I think, for us to be able to put our finger on, where real value lies, which is ultimately going to be dictated by the market when we take instructions, out there to the marketplace. The buyer decides ultimately, but reading a set of accounts is going to be challenging, because whereas we may have seen a nice smooth 2 or 3 years of steady level, as you said earlier on, it's going to be a little bit like that over the last what is the maintainable level going to be, and that's the ultimate challenge. But I think while the sector remains buoyant and important and relevant, I think there'll be plenty of interest in investing in it, and I'm hoping that we'll be able to take a little bit of advantage of that.
As I say, if you look at the figures, sales figures for August and September 2020, now it was still an unusual time. It wasn't like a normal August and September, but actually rates of infection were relatively low around that time. We were all being told, we're going to campaign to get people back to work. That didn't last very long. But also, yes, there are challenges to hospitality, but people are also literally being paid to go to restaurants, or being the government's paying part of people's bills. So, and it was unusual, and people weren't travelling as much, more people staying in the UK. There's also far less inbound tourism as well, which obviously overall inflates the size of the pie, if you like. So, but I think at August, September time, it's not a total baseline, but it's the most sensible, most comparable part of the year, and our sector was trading way up over that time. So that gives me a lot of hope that our sector can sustain this growth. And I'm got to be an optimist about these things. I think those community stores can trade at a level above where they typically have, and have significant, certainly comparing 2022 to maybe 2019. I think they'll be way ahead of that if they're doing well. If they're trading effectively, I think they can do that. The stores that have really suffered over this period of time, so you're not wanting to forget them, I think as people start to move around, they will pick up, and I think they'll be smarter. They'll maybe change some of the things that they do. They'll also see that their locations are changing from being just transient locations to maybe more people living in those city centres, and so they'll become maybe a bit more like a community store in the way they operate. They're offering different services and doing that in a different way. We talk about petrol forecourts quite a bit. I think the challenges for them are actually longer term in terms of the EVs and how they'll impact the business. But I think that coming out of this, a lot of customers have discovered that their petrol forecourt offers really good food and offers a really credible offer in terms of food. And I think that will actually become a really strong mitigating factor for some of the challenges on the fuel side of the business that will come, but which will also bring some opportunities in terms of the offer you can make. So yeah, I mean, different stores to different extents. I remain very optimistic about our sector going forward.
Well, James, I think that just about wraps it up. I really appreciate you joining us today for this conversation. Very interesting to hear your views on how things have evolved over the last 12 months and what's going to happen perhaps into the next year or so. Most of all, I look forward to getting back to all the networking.
Yeah, thanks very much, Steve. Thanks very much for having me. Always good to talk to you. And I'm really looking forward to seeing the report and seeing what's happening in various sectors. And I say, I think you've got a really interesting job over the next couple of years.